Today I'm going to show you the basic impact that tax strategies can have on your financial situation. These are 3 of a dozen or so strategies that I use with my clients at my firm. Everything at my firm focuses on financial planning based tax mitigation strategies. So just understand this is 3 of a dozen or so. There's a lot more in depth that we can go, but we're running up to the end of the year here. At the time I'm recording this, it's November 8th, it's Saturday night. So you have about 2 months left, just under 2 months actually. If you're watching this video in January of 26 forward, there's still some things you could do for 25 like the tax bonds, but again, that's not the purpose of this video. The purpose of this video is to show you what these strategies that I talk about would look like. Maybe your situation is close to this, maybe it's not, but it's just to give you a general idea of what you could save. And these are all estimates. This is not exact numbers. I'm not a CPA. I'm not a tax attorney. I don't compete or replace your CPA or tax attorney. I simply bring the financial planning based tax mitigation strategies to the table. Now, this is not tax advice, financial advice, or legal advice. Always consult with your tax advisor before making any decisions. And without further ado, let's get into the video and let me show you the first case study of the sample cases, which is a California couple earning $735,000, all W-2. You're probably told all the time you don't have many options for W-2. You don't, they're right, you're limited, but that doesn't mean you have no options. So for this couple, I recommended the medical LLC instead of a tiny home because California does not conform to bonus depreciation. The medical LLC, if you're unfamiliar, which I have videos that explain it a little bit more in depth, but what the medical LLC does is allow you to buy into an LLC and you're buying products at a wholesale or discounted value and then deducting them at a fair market value. Doing that, we can write off up to 50% of your adjusted gross income. So with no planning, they would pay $271,000 in taxes. And again, I'm going to round up, or I'm just going to say the big number. I'm not going to give it the exact number, but you can see the screen here, about $271,000 in taxes. With planning, they would pay $127,000 in taxes, right? $127,000 in taxes, as you can see right here, because we're able to write off 50% of their adjusted gross income. But that cost them $73,000, bringing their total out of pocket to about $201,000. So this would be a net savings of $70,000 in this scenario, okay? So as you can see, we go from 271 total outflow down to $201,000. Okay, number 2, we are going to look at a couple in Colorado. And for this couple, I recommended a tiny home. And that's because Colorado does conform to bonus depreciation. So for this specific couple, it was the duplex. The duplex is going to allow you to write off up to $655,000. Now, one thing to note, if you're W-2, you're going to be limited to 461L, excessive business loss limit. And that's basically saying, hey, if you're married, you're W-2, you can write off 626, that's the cap. And then if you're a single filer, it's going to be 313,000. If you don't know how the tiny home program works, you put 20% down, you seller finance 80%, but you get to write off 100% of the purchase price. There's a trust structure that goes into this, and that's what treats it as a business loss. The trust structure is actually going to do the material participation and then allow that loss to be classified as non-passive. And again, section 461 is going to limit that deduction. So without planning, they would have paid $293,000 in taxes. Colorado, let me double check here. Colorado does have state tax, if I remember correctly. Yes, Colorado state tax bracket 4.4%. So, and this is just a detailed income tax right here that breaks down the exact numbers. So if we scroll back up, $850,000 of income, $293,000 of taxes. But what we can do is we can purchase the duplex. It's $130,000 down plus a $5,000 admin fee that's also deductible. That brings their tax bill down to $69,000. But again, it costs them $135,000 to do that. So their total out of pocket was $204,000, bringing their net savings to $88,500. Now, one thing to note on this, you're probably thinking, well, Jeff, you said we can write off 655. I'm capped at 626. What happens to that remaining $29,000 of loss? Well, that unused loss is going to carry forward to 2026. This is not a use it or lose it program. And then final strategy, we're going to look at a business owner in Louisiana. And this recommendation is going to be a private AI marketing system. I have a video again that details this on my page here on YouTube. So what we do here is we put 20% down, seller finance 80%, and write off 100% of the purchase price. A little bit of the background of what this private AI marketing system is. It's a competitor to ChatGPT. The difference is that it's private. So ChatGPT and Grok and these open AIs, that's open data, it's open source. Versus a private AI system, everything that you have that is specific to your company, that's proprietary to your company, is going to hang out in your specific AI. So it's a private AI. No one else can access it. So for me, for example, I put a lot of our tax strategies into this private AI system in order to come up with different marketing ideas. For example, this video right here. I don't want that information floating around in ChatGPT, but with a private AI system, I have the peace of mind knowing that, hey, this is my specific AI. No one else can access this except for me. And because it's a technology package, it qualifies for a 179 deduction, Section 179. Just like how you can use heavy equipment for 179 or write off different things in your business, different equipment in your business, this is the same thing here. So without planning, this person would pay $495,000 in taxes. With planning, we can get their tax bill down to $66,000. And that's because we're writing off about $1.3 million. But that $1.3 million is going to cost, that to get that deduction is going to cost $260,000. So what we're doing is we're using some of this money right here that's already earmarked for taxes to purchase a private AI technology system. So that brings our total out-of-pocket cost to $326,000, and that is going to generate an approximate estimated net savings of $168,000. Again, we always want to check with your CPA to make sure that these numbers are accurate, to make sure that these numbers are going to apply to your situation. And that's why someone like myself comes in and actually works with your CPA, gets your CPA involved and make sure, hey, are the numbers all adding up here? It's not necessarily your CPA's job to bring you tax strategy like this. Now, some CPAs do, but not every CPA does. And I'm starting to learn more and more as I work with more CPAs and talk to more CPAs. A lot of them like these strategies. They approve of these strategies. They just aren't the ones that are going to go out and find them and bring them to their clients. A lot of the times, it's the clients that actually bring them to the CPA and then get me involved so we can help you, the client, the person watching this video, save as much money as possible. Now, again, these are just cleanup strategies. So these are strategies where you're like, hey, I'm at the end of the year. I need to do some things before the 31st of December, which a lot of us aren't going to be working on the 31st of December. So really, you want to be in like that third week of December. That's kind of the deadline that you should be thinking about. But these are just strategies that are going to help you save money. There's other strategies that we can implement. Maybe we do a non-qualified pension plan in lieu of a cash balance plan because the tax treatment's a lot better. Or maybe we implement, entity structures or, insurance companies or things like this. There's all of these different financial planning-based tax mitigation strategies that you have access to if you're watching this video. If you want more information on them and you want to see, hey, how would this apply to my situation? I got 600 grand from W-2. I make another $1 million from my business. I've seen those cases many, many times. This is what I do for a living. I run a financial consulting firm where I specifically bring the tax planning to the table. So if you want to see what your numbers would look like, if you want an income tax analysis done for you, you can use the link below this video to book a time at your convenience to meet with me one-on-one. And I hope to talk to you soon. Take care. Bye.